Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Ketan Ramachandra, and today we are diving into the eagerly anticipated first quarter earnings of big tech companies and assessing the outlook for these industry giants. Big tech titans were gearing up to unveil their earnings for Q1 2024, with investors eagerly awaiting insights into the financial health of these corporate juggernauts. Companies such as Microsoft, Apple, Amazon, Tesla, Meta, and Google have now disclosed their earnings results, offering a glimpse into their performance over the past quarter. But amidst the anticipation, a crucial question looms. Are the fundamentals still intact for these tech giants? Despite concerns around regulatory scrutiny, supply chain disruptions, geopolitical tensions, many big tech companies have continued to demonstrate resilience and adaptability. In addition, robust demand for digital services, cloud computing, e commerce, and electrical vehicles has fueled revenue growth and profitability for these companies. Now, let's delve into the earnings results for some of these big tech giants. Right, so starting with Apple, right? So they released their financial results for the quarter ending on March 30th, 2024, where quarterly revenue was 90.8 billion, which was higher than the estimate of 90.3. However, it showed a decrease of 4% on an annualized basis or year over year. Earnings per share or EPS stood at $1.53 for the quarter, beating the estimate of $1.50. Overall, it was a good earnings results for Apple. Now, CEO Tim Cook highlighted the company's revenue, mentioning an all-time high in services revenue and the launch of Apple Vision Pro, showcasing the potential of spatial computing. In addition, the board of directors announced a 4% increase in the quarterly dividend for the 12th consecutive year, which amounts to a cash dividend of 25 cents per share to their shareholders. The board also authorized a new program to repurchase up to 110 billion of the company's common stock, showing confidence in Apple's future. Now, share buybacks have also historically shown to lift share prices for such companies who engage in these programs. Now, we move on to Amazon, where net sales increased by 13% year over year to 143.3 billion in the first quarter, beating its estimate of 142.7 billion. Operating income surged to 15.3 billion compared to 4.8 billion a year ago. Net income rose to 10.4 billion, which translates to 98 cents per share, beating its estimate of 84 cents. So as you can see with Amazon as well, it was a good earnings quarter for this e-commerce giant. In addition, operating cash flow and free cash flow improved significantly as well, which highlights the company's healthy financial position. CEO Andy Jassy highlighted strong business performance, including AWS growth, expansion in stores business, and benefits from advertising efforts. Now we'll take a look at Alphabet Inc. or Google. CEO Sundar Pichai highlighted strong performance in search, YouTube, and cloud, indicating momentum across the company during the Gemini era. President and CFO emphasized revenue strength across the company and ongoing efforts to re-engineer the cost base. Now, simply put, when this mention re-engineering the cost base, they're simply referring to cost-cutting measures. Financial highlights for the first quarter of 2024 include revenues of 80.5 billion, which was up 15% year over year, which was higher than the estimate of 78.7 billion. Operating income of 25.5 billion uh, occurred, while the operating margin of 32%. Net income rose 23.7 billion, which translated into EPS of $1.89 per share, coming in higher than the estimate of $1.51. So once again, this was a good earnings quarter for Alphabet as well. Year-over-year changes in revenues showed significant growth with a 15% increase. Now, moving over to the current market darling, that is Nvidia. Now, they will release their first quarter on earnings on 22nd of May. So we don't have anything to talk about how their results have come in. However, let's take a quick look at their past results, which was the fourth quarter of 2023. Right, for that quarter, Nvidia reported revenue of 22.1 billion, marking a 22% increase from the previous quarter and a significant 265% increase from a year ago. Now, for that fourth quarter of 2024, the revenue estimate was 20.6 billion, and we can see it significantly came in higher, almost 10% higher at 22.1 billion. Now, earnings per share were also up $5.16, 28% higher than the previous quarter, beating the estimate of $4.61. Right, Jensen Huang, founder and CEO of Nvidia, emphasized the significant demand for accelerated computing and generative AI worldwide across various industries and sectors. Nvidia's data center platform experienced record quarterly revenue of 18.4 billion, up from 27% from the previous quarter and up 409% from a year ago, driven by diverse demand from cloud service providers, enterprise software companies, and vertical industries such as automotive, financial services, and healthcare. The Nvidia RTX platform, introduced less than 6 years ago, has become a massive PC platform for generative AI, serving 100 million gamers and creators. Now, the burning question on every investor's mind: can we expect this bullish momentum to extend further? While past performance is no guarantee of future results, the outlook for big tech remains favorable, driven by ongoing innovation, strategic investments, and expanding market opportunities. However, risks such as valuation concerns, regulatory challenges, and geopolitical uncertainties could temper market optimism. So while the fundamentals for these companies are still intact and projected to grow strongly in the next quarter, equity markets could face a rocky road ahead. Should fundamentals continue to remain solid, while the macroeconomic conditions of the US remain resilient, shares of big tech could still have room to run, and any pullbacks or corrections in their share price could provide potential opportunities for dollar cost averaging. Now, with that, this wraps up today's episode of Big Tech Q1 Earnings, where we've examined some of the first quarter earnings and outlook for these industry giants. Join us next time for more insights into the intersection of technology and finance. In the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, happy trading.